Hey everyone, and welcome. Today, we're diving into something that every single one of us with a car or bike has to deal with. But honestly, it can be super confusing. Motor insurance. Yeah, we all pay that premium every year, but do we really, truly know what we're getting? Let's kick things off with a question that gets right to the heart of it.
I mean, really think about that. Your amazing new car, the one you worked so hard for, is just gone. You've got insurance, so you're all good, right? You'd assume the insurance company just writes you a check for a new car. Simple. But is that actually how it works? Well, the answer might not be what you think, and that's exactly what we're going to decode today.
So to get to the bottom of this, we're going to build what I like to call the pyramid of protection. We'll start at the bottom with the absolute legal basics. Then we'll climb up to that first big choice, third party or comprehensive. From there, we'll dig into the sneaky problem of your car's value dropping, how to supercharge your policy to fight it, and finally, we'll reach the peak, the ultimate safety net that can save you a fortune. All right, let's kick things off at the very foundation of our pyramid. In India, you don't really have a choice in the matter. Having motor insurance isn't just a good idea, it's the law. And this law is there for a really, really important reason. It's all about creating a financial safety net. You see, it makes sure that if there's an accident, there's money to cover injuries or damage to other people, the third party. So it's not just about protecting your car, it's about protecting everyone else out there on the road with you.
So you know you've got to have insurance, but what kind? This brings us to the first huge decision you have to make, the choice between a third-party policy and what's called a comprehensive policy.
And this table here, it breaks it down perfectly. A third-party policy, that's the legal minimum. Only covers damage you do to other people or their stuff. You can think of it as them cover. But a comprehensive policy, that covers them, plus it covers your own car. Damage from an accident, theft, even a natural disaster like a flood. You're covered. It's a massive step up. Okay, so let's say you did the smart thing. You got a comprehensive policy, so your own car is protected. Awesome. But here's where it gets a little complicated. If something happens, how much does the insurance company actually give you? This is where we hit a hidden snag that catches so many people out: depreciation. You see, every policy is based on something called the Insured Declared Value, or IDV. Now, here's the absolute key thing you need to get. The IDV is not what you paid for the car. It's what your car is worth on the market today. It's resale value. And we all know what happens to a car's value the second you drive it off the lot. And that's the real trap. You know it, I know it, your car's value is dropping every single year. And as it drops, your IDV drops. And since the IDV is the maximum your insurance will pay, your potential payout drops too. This creates a bigger and bigger gap between what your car cost you and what you'd actually get back. So what do? How do you fight back against the sinking value and plug those coverage gaps? Well, the answer is in the add-ons. You can think of these as awesome power-ups for your basic policy. Insurance companies offer a bunch of these. Some of the most popular are zero depreciation cover, which we'll get to in a sec, consumables cover for all those little bits and bobs like nuts and bolts, roadside assistance, which is a lifesaver if you break down, and the real heavy hitter we're building up to, return to invoice, or RTI. First up, let's talk about zero depreciation. People often call it bumper-to-bumper cover. Normally, if you need to replace, say, a plastic bumper, the insurer will say, well, the old one was worn out, and they'll deduct for that wear and tear, leaving you to pay the rest. With this add-on, nope, they pay the full cost of the brand new car. This is huge for repairs because it means you're not suddenly facing a big bill you didn't expect. But what about that nightmare scenario from the beginning? Your car getting stolen or being so badly damaged it's a total write-off. For that, you need the most powerful add-on there is. This is the big one, the ultimate safety net, return to invoice cover, RTI. What RTI does is simple, but it's absolutely brilliant. It says that if your car is a total loss, the insurance company won't pay you the depreciated IDV. No, they will pay you the car's original invoice value. That's the full on-road price you paid, the ex-showroom cost, the road tax, the registration, the whole shebang. It completely erases that depreciation gap. To really see what a massive difference this makes, let's talk about a real-world scenario. Meet Rajiv. He's thrilled. He just got a brand new SUV, and the total on-road price was 17 lakh rupees. But then, just a year and a half later, disaster. His car gets trapped in a massive flood and it's declared a total loss. It's a write-off. And because of depreciation, its value, its IDV, has already plummeted from 17 lakhs down to only 14 lakhs. Now, let's say Rajiv only had a standard comprehensive policy. The insurance company looks at the IDV and says, here's your 14 lakhs. That means Rajiv is short by 3 lakh rupees. That's a huge out-of-pocket loss he has to cover himself just to get back to square one. But what if Rajiv did have the RTI add-on? Oh, this changes everything. This is the game changer. The insurance company pays him the full original invoice price of 17 lakh rupees. No loss, no shortfall. He literally has enough cash to go out and buy a brand new replacement. That right there is what real protection looks like. So, it's super important to get the difference here, right? Zero depreciation is your best friend when your car is damaged and needs repairs. It handles the cost of new parts. But return to invoice, that's your hero when your car is gone, stolen, or totaled. It protects your entire initial investment. Two different jobs, both absolutely crucial. And there you have it. We've climbed all the way to the top of our protection pyramid. We've gone from the bare minimum required by law all the way to the ultimate financial safety net. So now there's really only one question left to ask yourself. So I want you to do something after this. Go pull out your own insurance papers. Take a real look. Are you just ticking a box to stay legal? Or have you built a policy that actually protects the hard-earned money you poured into your vehicle? Because as we just saw with Rajiv, the difference isn't just a piece of paper. It could be lakhs of rupees. Make sure you're not just insured. Make sure you're truly covered.